Hello and welcome to the Power of Passive Investing. We have a very interesting guest today, Mike Zane. Mike and I actually met at a local real estate event here in New Jersey about a month or so back, and we had a great conversation about what Mike and his team do and how indirectly their business benefits limited partners, people in our community that passively invest in syndication. So Mike and I are gonna touch on this topic, but let's first start with Mike introducing himself and telling us a little bit about himself. So Mike, welcome.
Sure, thank you so much. I'm the managing partner and the founder of LexCraft Advisors. We are a fund administrator. Um, you might also call us an outsourced CFO services firm, depending on the exact services that we're providing for you. But basically, what our team does is we work with we only work with small and middle market real estate investment shops. That includes private equity firms, as well as some family offices, syndicators, fund managers. And we support a set of back office activities. A lot of it is centered around accounting, controller services. A lot of it is also centered around investor management. So I'm sure we'll get into all of that in more detail, but we have a team of folks split between here in New Jersey, where I'm based, and we have a few folks in Denver, Colorado as well. We founded this company about 4 years ago now. I spent a good bit of time prior to that as a management consultant, and so I was doing sort of analogous work at much larger clients around the country, and decided at some point to basically go out on my own, scale it down, and really create this niche, which has worked out very well. Just focused on middle market private equity real estate and those family offices as well. So that's us in a nutshell, and I'm happy to get into some more detail about it.
Mike, thank you for that introduction. And I like how you transitioned into what you do, how you got there, and who is your target audience. Let's focus in a little bit more on your existing and potential clients. You kind of mentioned, mid-market, family offices. So tell our listeners a little bit more. Who do you serve, and what are some of the examples of a typical work that you do for them as a CFO? Because especially for folks that are not in the financial services industry, this could be completely foreign. So I assume people may not even know certain terminology. So feel free to explain it in the more layman terms as well.
Yeah, sure. I'm happy to. So our typical client is, again, middle market commercial real estate. So the way that we define that is, we're kind of looking for a couple of different structures in a client. Some of our clients are running syndication shops, so they're acquiring assets sort of deal by deal and raising capital, for each and every deal that they decide to acquire. Other clients are raising capital and managing funds, basically blind pool funds where they'll end up owning a collection or a portfolio of assets, and the returns to the LPs are kind of established at that fund level rather than at the asset level like you would see with a syndication. So we serve both of those client types. We also have in the last year or so begun to serve family offices, which may be a little bit less relevant. Some family offices take in outside capital, some don't. But the the service types that we're providing to them are, fairly similar to what we would provide to others who are taking on outside LP capital. So that's kind of the target client. I guess in terms of size, I would say that, most of our clients are managing equity anywhere between, on the low end, maybe 10 or 15 million. We have clients managing upwards of 100, 150 million at this point in equity. So, it's a fairly broad spectrum, but we find that across that spectrum, there's a lot of value that we can bring to these shops in different ways, and so we've been able to build a business doing just that.
Ex- Excellent. Thank you for
Yeah.
sharing, Mike. And so you mentioned two services that are related, somewhat related, but not every client may potentially ask for both fund administration and or CFO services. And I'm assuming that family offices are probably looking a lot more of CFO services in general overall because of the nature of the business. Um,
Yeah.
keeping that in mind, give our audience a little bit more into um, CFO services, specifically for family offices, and how does that benefit them, and how would it benefit, let's say, a private equity shop who may not be a family office, but it's still like a private equity shop that is looking to grow in a field of real estate, and kind of on the brink of deciding whether they need to hire a CFO or whether they can do the work without them.
Yeah, I think what we find is that when our CFO services begin to get really valuable for these clients is kind of when they hit this inflection point where they decide to really focus on growing the business. Because, up until a point, it may very well be possible to manage a smaller, contained operation with just, one or two or three folks, kind of overseeing it. I would say the majority of our clients get to a point where, they want to kind of climb that growth curve. And it's really at that point when they need to make a decision about who and how they're going to, um, get help basically with some of these different
Yeah,
CFO services. So, I think a good example is that everybody does accounting and bookkeeping to some extent,
yeah,
whether you're just starting out or whether you're running a larger shop. But at some point, that can become unruly, as you grow and as
sure.
transaction volume grows. The other thing that we see a lot of is, as the organization increases in complexity, you run into these situations where hidden risks begin to mount within the business, kind of from an operational perspective. And so at that point, having somebody sort of overseeing the books on a daily basis, that may not be enough. Um, we provide in addition to, your typical accounting bookkeeping type of services, we, I think, do a really good job providing controller oversight, to most of our clients at this point. And that's designed to sit on top of those accounting and bookkeeping activities and, kind of be the reviewer, the checker of that. And, it can get quite technical. I have a background in accounting, as do the folks on our team. So, it might not be worth getting into all of that, but suffice it to say that putting in place those checks and balances and really those controls from an accounting perspective can be really valuable, especially to the clients who are, again, looking to climb that growth curve, looking to raise capital from larger investors and to kind of take on those larger check sizes. Those investors tend to obviously be quite sophisticated, and they're often looking for some of this behind the scenes activity to ensure that, they're putting money with a sponsor that has these systems and these controls in place. So I think that's probably the best example that I can think of a place where, the CFO services kind of become more and more relevant over time.
Sure, and thank you. That segues us into potential needs of limited partners or passive investors, people that invest in private equity syndications passively. Some investors struggle with understanding who to invest, when to invest, how to read the offerings, and how to understand what the sponsor, a particular sponsor, is offering. So while I understand you as a fund administrator don't really work directly with passive investors, but again, in your capacity from that back office operations fund administrator perspective, how would you say your work impacts what the operators show into the end user, their passive investors? How does it impact and how does it benefit the operators in terms of attracting more investors because of the quality of the reports or the quality of the data that you're providing them with?
Mm-hmm. Yeah, I think that's an important question. There's a lot out there and a lot has been written specifically for LPs about how to vet a sponsor and how to look at the deals that they've exited in the past and to look at the returns that they've achieved through those deals and through those exits. And that's all well and good. That's important. Something that I personally wish that we saw more of out there was some guidance on really what to look for and what questions to ask as it relates to how the sponsor has structured their business, from an operational perspective. And I don't think there's a whole lot of that going on still. So when we think about, we almost think about the limited partners as the customer, if you will,
Sure.
of especially the customer of the sponsor or the GP. And what we're trying to do is to really facilitate a great LP experience on behalf of our clients who are the sponsors. And the ways that we do that are sort of varied, but I think the core piece of it is that in this day and age, every sponsor should have an investor management platform set up, established, and fully functional. And not only functional, but it should, similar to what I was talking about with the accounting piece before, there should be sort of a control environment or a set of checks and balances around that to ensure that information is being communicated both timely and accurately to the LPs. So in terms of our services, we do just that. So on behalf of our clients, we manage these investor platforms. So, when the LPs go in there and look at the information that's posted or the documents that are posted, or the deals that are posted, that's us on the back end making that happen. And we like to think that we do it in a way that both gets all of the information across, but really with a focus on that sort of risk mitigation that I was talking about. So I think that's probably the core pathway through which we try our best to have a positive impact on LP experience. I think the other place where we see a lot of small and middle market sponsors struggle is with investor communications. So we have clients who come to us and will say, hey, I whether the results of the deals have been good or bad, we simply haven't had time to issue proper reporting to the investors in several
Sure.
quarters or a year or whatever it might be. And that's not a good investor experience. I mean, nobody wants to put money into a black box and not know what's going on. So we have a team established specific to investor reporting. We spend a lot of time drafting investor reporting. From the majority of our clients, we gain access to the accounting system, obviously the investor management platform, and so we have the information at our fingertips to take that, convert it into a narrative, include the data visuals that make for what we think are really nice reporting packages, to the point where even a small sponsor could be putting forth a package that's on par with somebody 5 or 10 times the size in terms of equity. And
Nice.
so I think that's the second major leg of providing that great LP experience.
Yeah, no, I love it, Mike. Yeah, when you were explaining how your services indirectly benefit limited partners, I was actually thinking of pharmaceutical analogies. So if the sponsors are the doctors treating their patients, then you would essentially be a pill, and the doctor needs to know which pill to select, giving it to their patients to make sure that the pill it treats whatever condition patient has in that case. But that actually led me to another question, because you were talking about investor portals and stuff. So
Sure.
I know for a fact that there's a number of investor portals that offer one-size-fits-all solution, kind of everything. And when they approach a potential client, someone who is looking for a new investor portal, they say, well, you don't need to worry about operations, back office, fund administration, and so forth, because our portal provides it all. And you can have it for this monthly package, and we will take care of everything. So, and this, I feel like this is particularly attractive to the smaller firms, probably the ones that are starting out and don't
Yeah.
have enough hands on deck to support the business. So they're like, wow, this is going to take care of the back office, so I can concentrate on finding the deals and raising money. That's perfect. And they jump towards that resource and start using it. But my question is around the end result. How is that type of solution different from what you guys are
Yeah.
providing, where I'm sure you work very closely with various portal providers while providing service that's human centric and that's completely customizable, because you're dealing with the experts, not some AI or software that spits out a boilerplate template is same for everyone. And in your case, it could be
Yeah.
customizable for specific client needs, whether they are buying multifamily, maybe buying flex space, medical, or maybe they're in a B or A type of market or COD type of market, which also may be reflected in a type of reporting, and the extent of the reporting that they need and the type of clients that they need may also influence the type of the reporting that they need.
Mhm.
I hope my question is clear.
Yeah, no, that's a great question. So the way that we think about the market is, in terms of investor management platforms, there are basically two groups. You've got, on one hand, the groups that are solely software providers. They're putting out investor management software products, and they all have support teams, but they're sort of not offering fund administration services on top of their software products.
Sure.
On the other hand, there are a series of firms in the marketplace that have developed the software, and they're also making the effort to layer services on top of it. So that,
Yep.
they're providing services of their own with their own people on top of their software. And what we find is a couple of things. So those companies that provide the services on top of their software, no question, there's a place for those players in the market. And to your point, there are plenty of folks out there using them with success,
Sure.
and that's terrific. Um, the clients who we work with, uh, they are either, in some cases, past users of those types of services, or they feel that those services would not sort of adequately cover, the support that they think they need. And I think the reason for that is that when you're talking about fund administration kind of as an add-on to a software package, or fund administration from sort of a large generalist fund admin, it tends to be, um, like you said, kind of this one size fits all approach to that service. And so when we started this company 4 years ago, we did it with the idea that there's room in the marketplace for somebody who can do this, but in a very sort of, white glove, tailored kind of way. And given the backgrounds that a lot of our team comes from the world of management consulting, where projects are structured, to support the exact needs of the client each and every time, I've really taken that and tried to apply that here in full. And so, I think that that kind of leads us to this place where there are, we think, a there's a large segment of the middle market private equity real estate industry that is using software products that may come from this group over here that has the services layered on top, as well as this group over here that just, develops the software with no services attached. And in both cases, we've found that clients of ours have needed help beyond what is available from sort of the traditional pathway.
Sure.
And so, that's where we've been able to come in, and I think drive a lot of value for some of these firms that we're working with. So let me know if that answers the question, but that's kind of how we
Yeah.
think about it.
Yeah, no, I like that. And with that in mind, and with the rise of AI technology, are you big on using AI? Do you see potentially some of the pieces of the work that you do being replaced or complemented by AI technology?
So we just talked about these software providers in the investor management platform space. We also obviously work with a lot of property accounting software products. All of those at this point are working on or have achieved some level of AI incorporation into their
Yeah,
products. They have to in order to kind
absolutely.
of be, remain relevant. And I think what we've found is that I think it's still early stages, in terms of really the level of competency that the AI tool really brings to the table.
Mm-hmm.
So, our to so far our unfortunately so far our workflows have not really been impacted that much by AI. What we think will happen eventually, and what we're very eager for, is I mean, look, we have analysts on our team who spend a lot of time doing manual data manipulation type of work that our
Sure.
clients need done for reporting purposes and accounting purposes and all things like that. And as as the manager of this business, I would love to see that go away. I would love for an analyst to be able to click the button and sort of have that happen, and then spend the rest of their time doing some higher value task. We're not there yet. I hope we get there, and when we do, we'll be pretty excited about it. So I think that's kind of where we stand on AI, but I don't think we're not concerned about it from the standpoint that it's going to replace the business. I mean, our clients are already bringing us in and choosing to partner with us because they want that level of, that deep level of partnership. They want somebody like us to really function as an extension of their team. They want us to be there with them, not just to deliver some reporting or work like that, but really to help them work through decisions and help them, really build the business. So,
Of course, of course. Yeah, no, excellent answers. Thank you for that. Mike, while working with your clients, you're obviously very deep into the commercial real estate space. Can you share with us what this year has been like? And also, now that we're in this last inning, if you will, of the year, getting close to New Year, I can't believe we're already in November. What do you foresee in terms of the commercial real estate industry? And now that the elections are behind us, thank God. What do you see as the potential implications of the new um, leadership in the White House, as well as how is that going to translate from 2024 into 2025?
hmm So we look at this, when most people talk about this or answer this question, they're talking about what are asset prices going to do, what will
Of
interest
course.
rates do, things like that.
Yes.
We actually look at it a little bit differently. I mean, our clients are the folks who are out there raising the capital to do these deals. And so we think about it from the perspective of capital availability. And I think what we're seeing is, well, I'll start out with what we've seen over the last maybe 18 months. So obviously going back to kind of the COVID era, interest rates were super low, capital was freely available, to the point where money was almost free in some cases.
Yeah. Sure.
That has obviously changed in a major way, going back, a year, 18 months at this point. And so, thinking back to last year, we had clients that were interested in actively, taking steps toward raising new funds, forming new fund entities, raising blind pool funds of capital. And more than a few of those plans got shelved in late 2023, early 2024. I think what our clients were finding was that the interest from equity providers just wasn't there. The appetite wasn't there. And at the same time, because of the pullback that occurred in the banking sector, the traditional banking sector, as far as financing, I think that pullback in many cases necessitated even more equity coming to each deal. And so you had this situation where you needed even more equity than you did before, but the equity wasn't really interested in getting involved. It was sort of happy to sit on the sidelines, and it was experiencing, um, what feels like pretty decent returns from risk-free assets compared to, COVID era interest rates. And it was sort of just happy to sit there in treasuries and other things like that. So I think what we've seen in the last few months, let's say from midsummer until now, I think equity is beginning to come back to the table a little bit. I think it's been, maybe a little bit slower than some of our clients would have hoped. But I will say I think it's gotten to the point where, I mean, just this week, I've probably heard from 3 clients that it's time to dust off those plans from that fundraising effort that got shelved, a year ago. And let's revisit this and see if now it makes sense to go out to the market and look to raise this equity. So I think as we head into 25, I mean, it feels like this will continue, barring some major change to the interest rate regime. It feels like the equity will begin to return. I think if we see interest rates come down in any kind of meaningful way to the point where the opportunity cost of deploying the equity is not quite what it is when, a 3 or 6 month treasury is above 5%, that could further the trend toward toward more fundraising efforts. I think the sponsors may just see that the equity is not getting great returns on the risk-free assets anymore. It's time to kind of ramp up those efforts. So, I wouldn't be entirely surprised to see that going into next year.
Thank you. Thanks for that overview. Mike, this has been a value-packed interview, very much appreciated. Please share with our audience how they can reach out to you if they're interested in speaking with you. What's the best way?
Yeah, of course, of course. So you can find us online. We're at www.lexcraftadvisors.com. You can go there. You can read more about us. You can read about the services that we provide to our clients. We are more than happy for any of your listeners to go on there and schedule a meeting with us. Our business development team is happy to take those calls, and I'm happy to jump on as well to talk to folks. So I encourage everybody to do that, and you can also personally find me on LinkedIn. So looking forward to connecting with as many of your listeners as I can. And if anybody wants to send a message directly, you can do that at info@lexcraftadvisors.com.
Awesome. And again, for those that are local to New York, New Jersey, Mike is in Northern New Jersey, so I'm sure he'll be more than happy to meet with you folks as well. Mike, one of the last questions that we ask is more on a personal note. We typically ask, how do you like to give back, whether it's locally or national level, or maybe some of your alma maters? So what are your favorite ways to give back?
Yeah, that's a great question. So one of the things that I've done over the last couple of years is I'm a Rutgers alum, Rutgers University here in New Jersey, and
Here?
yeah, so they have a Center for Real Estate, which has produced some good results. I mean, we've actually taken on a couple of students from there,
Nice.
as employees, and
Excellent.
we hope to do more of it. So I've dedicated some time there, which I think is both enjoyable for me, but I think it's also valuable for the program, the students. And so over time, I hope to be in a position to do a lot more of that.
Amazing, amazing. Love it. I'm, in the same boat. While we're not hiring anyone right now, but I've been actively giving back Rutgers community, kind of in the steps preceding the interviews with folks like you. I've been coaching and mentoring students on how to ace their interviews and how to do the follow-ups and how to fine-tune their resumes so that people like you actually reach out to them and want to meet with them as well. So
Love
great
it.
to hear that we're serving and helping the same cause and kind of helping our alma mater to continue excelling and progressing in the financial services industry. So awesome.
Hmm.
Mike,
Terrific.
thank you so much. It's been an incredible interview. And folks, for anyone interested in fund administration or CFO services that Mike and his team at Lex Crafters provides, feel free to reach out to him directly. Thank you and have a great day.
Thanks so much.
Everyone.